you need motivation and inspiration to get you off the couch and boss up? We've got you covered. Welcome to the Build or Destroy podcast. Self-improvement, education, business, relationships, financial literacy, investing, and doing for self. Let's do this. Here's your host, Anthony Barber Jr., a.k.a. The Builder.
What's up, good people? It's your boy, The Builder, once again. Back with another episode of the Build or Destroy podcast. And today, we're going to talk about the power of low float penny stocks. So, this is a topic that a lot of people that get coaching from me and mentoring from me, like, I kind of segue them into this like right away because it's fairly easy to understand. It's a fairly easy concept to understand. Like, in my opinion, these are like the setups that cater to the old, quote of, buy low, sell high, and this goes into momentum and swing trading as well, because a lot of momentum traders and swing traders, play off of this, a lot. You can swing anything, don't get it twisted, and you can play the momentum on anything, but especially like low float stocks that move with, relative ease, things of that nature. I'm going to give you my rendition of it. Basically, like, the way I view it is like it's a stock that I'm looking at that has, a very low share structure, where the outstanding shares are, significantly lower than like your average, basically. So let's say, like, take the OTC, for example, because, that's an arena that a lot of people are getting into. So let's just look at that for a minute. The OTC. So, like, you have share structures that are super low, like 250 million shares, which is ridiculously low, especially for like a high liquidity market, like, or sector like the OTC, where you have a lot of traders, a boatload of them, where millions of dollars, billions of dollars being exchanged, daily. Man, it's just ridiculous. It's a monster, sector to play in. But you have some share counts that are like, anywhere, they can range anywhere from 250 million all the way up to like 50 billion, 100 billion, 300 billion. I've seen some ridiculous share counts. And it's like, one thing that I see a lot of people making a mistake of doing is, it doesn't, like you got to look at the OTC like this. These are startups, man. Like, and when I say that, I use that term loosely because there's only a handful, a small percentage, maybe like 20%, 25%, and that might be a stretch, that are like legit startups, that are like legit companies that either reverse merged to get public, and they didn't have to go through all the scrutiny or get into bed with a venture capitalist or hedge fund to go to NASDAQ or the NYSE, so they backdoor their way into the OTC through a reverse merger, and these are some power players that we're seeing, coming into the OTC. And when I say power players, I mean like people that are like highly credentialed in their field, been in the game, they know their shit, like, and you gotta ask yourself, like, well, why are they messing around in the OTC? It's the swamp. It's like, that's just perception, man. Like, 90% of the people trading in the OTC are like highly emotional people. Like, they don't read press releases. They don't have an understanding of like how to read, financial disclosures and They don't even know what certain terms are. Like, they don't even know how to follow certain trends or anything. Like, not that I'm shitting on anybody, but I'm saying, like, I keep stressing it. They call you dumb money for a reason. It's because you won't use logic. You putting your whole rent check into the market, and then when you lose it, you want to commit suicide. You want to kill yourself, or go on Twitter rants, or get into a Discord group and just and blow the spot up. That ain't cool. You know what I'm saying? Like check your emotions at the door, man. Like, learn first. If you learn, you won't ever be emotional. You will at least know how you're being bent over the table and who's bending you over, if that situation were to arise, and you wouldn't be emotional about it. You would just move accordingly and get the fuck out of there, and move on to something quality, and try to find quality plays, quality companies, quality startups with quality management, quality CEOs, quality product, innovative product, disruptive product that makes sense. Do you know what I'm saying? Like, I know a lot of people not gonna get what the hell I'm saying because they're emotional and they're not logical, and I'm being very, very precise here in my wording. I'm trying to get you to understand and stress to you that, like, this shit is like, it's easy once you get into the learning mode. Once you get into a learning mentality where you're constantly learning, you don't have time for emotional shit. You're not gonna be bothered by day-to-day price action, because you will understand why it's going on, who's doing it, where it's gonna go. You'll be able to assess a lot of this stuff just from like learning the game and really immersing yourself in this game. But back to low floats. So let's say if a company has a bloated share structure that's just super huge, they have a giant authorized share count, which means that they can potentially dilute, and flood the market with a bunch of new shares, and cut themselves a check, or they can use it for acquisitions, which is kind of like the rub, right? Because a lot of companies would be like, oh, well, we had to dilute because we're going to acquire this company, or we're going to acquire that, or do this. It's like, you have to really be mindful of that, and you have to really hold them accountable. It's like, they say they're going to do acquisition, like, stay the fuck on their head about it. That's the luxury you have as a retail trader or retail investor, especially operating in the OTC, where it's like the Wild West. The regulation standards aren't as crazy as far as like what a lot of the companies can get away with. A lot of these CEOs shady. Like, they can really rug pull you and do a lot of crazy shit and cost you some dough. If you're not mindful, if you just go in blind, believing everything they say, then that's on you. But like, most of us know better. Like, we know that we have to, like, you have to scrutinize the OTC CEO 100 times more than you do a NASDAQ CEO. And I would beg to say, you need to scrutinize the shit out of the NASDAQ or the NYSE or whatever CEO just as hard, really. But like the OTC especially, because it's like, bro, you starting out. You want me to put my hard-earned money in your company. You promise, making all these outlandish claims and promises. It's like, that's cute, but it's like, I'm not in it for that shit. It's like, what those financials looking like? What's those revenues looking like? And no, it's not fair to really hang that dark cloud over a company that just got current, that's just getting their structure together. But you have to ask a certain amount of critical questions too. Like, are they hiring people? Every couple months or so, are they hiring a new person? Did they hire a CTO, a CFO? Did they hire a good marketing company to put their press releases out? Do they have an investor relations department, that you can, have rapport with and build rapport with as an investor? And are they transparent? Are they rude and obnoxious, or are they, candid, and do they have poise and, display a certain level of professionalism when dealing with the general public? That's just baseline shit. We're not even talking about like the float yet. Then check out the float. Like, look at how the shit's structured, man. It don't matter how good the company is. If the float is like ridiculously large, it's not going to move. You're going to be playing the whole one tick, let me try to get some quick profit off of one tick type of shit. And you're going to get burned that way. You're not going to make no money, man. You're not going to make no money. It's like, yeah, but I got a gajillion shares of XYZ company. And yeah, if it moves, it's like, dude, you're never going to be able to liquidate your position because everybody's holding gigantic bags of that shit. You know what I'm saying? It's like everybody has it's like Zimbabwe. It's like everybody has a wheelbarrow full of money, man. Everybody has a wheelbarrow full of shares. Like, and you're basically standing in line with your wheelbarrow trying to exit the room. Like, yeah, I'm going to sell all of these. And it's like, but you don't even realize there's like hundreds of people in front of you with the same size wheelbarrow full of shares, same size, or if not bigger. And they're trying to and everybody's trying to hit the door at the same damn time as soon as it moves up a smidget. And it's like, that ain't how this game go. It's like they purposely put these bullshit companies there to distract you from the real shit, from the companies that are actually doing good business. And that's my point. A low float company, even if it is like already at like 10 cent, 25 cent, let's say, for example, right? It can still move relatively quick to, into the dollar range if the share structure is looking really good. If it's really healthy, really small, one big catalyst, one big corporate, move on the company's part can literally bring in a tidal wave of volume, and it won't. And the volume that's needed to take that stock to dollars, it isn't even like a fraction of the amount of volume that you see coming into these bloated companies. Like, it's like a giant amount, billion. It's like, oh, it traded over 500 million. It's like, dude, like, of course it did. Look how liquid it is. You're getting everything for like less than pennies. Like, it's like, and it's staying there. It's like it stays put no matter how much you buy. It's just everybody's just buying. And it's like only a few people are like making a little bit of dough because every time it moves up a tick, they're just like shaving a little bit of money off. $20 here, $50 here, $100 here. Some people are cool. They make $100 a day. And by the way, $100 a day is $36,500. That's more than a McDonald's salary. So a lot of people will be like, well, fuck McDonald's. Like, I'll just focus on trying to make $100 a day in the stock market, and they'll just live off and eat off that salary. Nothing wrong with that. That's cool. I mean, if that's what you aiming for, like, you can get that easy. But my point is, like, if you're really trying to make some real life-changing money that you can invest in a business, start a business with, buy a home, put your kids through college, start a college fund, put some money in the trust fund, things of that nature. I'm talking like tens and thousands of dollars, like that type shit, like hundreds of thousands of dollars, possibly millions. Like searching for like low floaters or low float stocks with a decent sized share structure with good catalysts and good management, can be a good avenue to go. Could be. I'm not gonna say it is. It is what it is. Like, it's your money, man. It's your mind. Show your feelings. Do what you want. But I'm just giving my perspective, right? So, in my opinion, this is a good avenue to take, especially like starting out. When your money is like, kind of minimum. You don't really have a lot of leverage, man. You're not coming in the game with 100,000 to just blow. You might have a couple hundred. You want to take a couple hundred to a couple thousand. Well, searching for low float stocks is a good way to go. Yeah, it might take a minute for them to move, but when they move, they move. I mean, the moves are significant. 30%, 100%. I've seen low float stocks move 200, 300% and just in one session, in a matter of hours. Like, they'll just shoot up, you know what I'm saying? After like 3-4 months of just like trading sideways, right? Because that's all accumulation. And another thing, watch the accumulation. Go on TradeView, download some software, or app like TradeView or something, and look at the accumulation. Look at the accumulation line. If it's going up, even if the price isn't really going up yet, that usually precedes the price. If people are accumulating the shares, the price is soon to follow, especially on a low flow stock. Like I said, one big press release, one big catalyst, can really, cause a surge of volume to come in unexpectedly. So you can literally just be sitting on your hands, accumulating shares every week, and then boom, it'll shoot up. You yank your money out, you take your profit, and you get an instant double down or a triple down if everything works out like that. I'm just saying that I've been in plays like that. I've seen other people in plays like that. It does happen. It does work. Low floats eventually move. They eventually start moving. Like it's just a matter of when. It's just a matter of time. So that's just a little quick perspective on, somebody that might be getting in the game early. Look for these quality companies, man, with like quality share counts. Nothing too overblown. Because the overblown stuff, man, like it's just played out. You know what I'm saying? You can do it, do what you want, but it's like, are you really trying to be strategic and methodical, or are you just gambling? You know what I'm saying? A lot of people chase the really liquid stuff because they don't want to bother learning, and then like they get shit on, and then they like try to hate on like trading or like investing in general, or or the OTC. And that's why the OTC got a rep like it do, because it got shady CEOs that have done shady shit, and they've milked shareholders, and they've diluted the hell out of stuff and drove it down, and they have bloated share counts. They won't reduce shares, or they'll have people buy into this shit, and then they'll reverse split the hell out of it, knowing damn well they had no intentions on cleaning up the share count. Like, if they're not making money, they can't clean up the shares. Okay, that's another rule of thumb. Like, if they're not pursuing revenue, or if the moves they're not making on the chessboard aren't going to eventually equal to revenue, you need to play that shit for what it is. Like, treat it for what it is. That's all I'm saying. Don't get too emotional about it. Don't invest, all this time and effort and all this shit into this company that is ultimately not going to go anywhere, man. They're not showing you. Like, watch how they're acting. Keep track of them. Like, look at how they're moving, and then you can move accordingly, is what all I'm saying. It's very easy to, look at a share count, especially in the OTC. You go to otcmarkets.com. And then you just click on the security details tab. And after that, you scroll down. It shows you the market cap. It shows you the authorized share count. It shows you the outstanding shares, the restricted shares, the unrestricted shares, any shares that's being held at DTC. It shows you the float. Like, it shows you the shareholders on record, predicated upon if it's been updated or not. You can check out the company's profile. Make sure the profile is verified, transfer agent verified. You can see if they got any independent directors, if they're penny stock exempt, like all types of things like that you can find just by, going on this one little simple website. It has news on there. It has a news tab. Click right on that tab and start reading press releases. Go all the way back. See what the hell they've been doing. Like, dig into the financial reports. Look at the company. Check the disclosures. Everything. Like get in everybody's business is what I'm saying. Like, don't just look at it like, man, they got popcorn flavored deodorant. It's the next big rage, out of Argentina, and it's sweeping the United States. We need to get on this early. It's like, bro, like, it's a pump. Like, get the hell out of here, bro. Like tangible shit, man. Tangible. Like, I always stress that. Tangible. What's moving? How's the world gonna look in the next 2 to 5 years? Like, bro, like, it's a hype thing. It's a hype beast. Like, treat it like a hype beast. Take it out back, shoot it, get your money and run. If you can even get money, if it's out of it. If it's not super liquid. If it's super liquid, don't even touch it, in my opinion. But that's just my opinion. Do what you want. You know what I'm saying? So, just something to chew on. Just something to think about. We're going to expand on all of these episodes. I know a lot of people like, man, like, you haven't gave, like, shout out some specific companies and examples. It's like, that ain't time for all of that. Like, I'm trying to get people to understand, like, just the methodology behind all of this stuff. Like, it has to be, said a certain way. So just stay with me, and we're going to get there. You know what I'm saying? Until next time. Peace.
Thanks for listening to the Build or Destroy podcast with your host, Anthony Barber Jr., aka The Builder. We hope you enjoyed our deep dive into all the tips and tricks you can use to boss your life up. If you're interested in expanding your mind and reaching your definition of freedom and how these ideas and views can be applied in the real world, tap in with us next week. As always, you can head over to www.builderslsb.com to cop some motivation, dope merch, and sign up to our email list. And don't forget to check out all the links and resources in the show notes. That's all for this episode, folks. And as always, boss up instead of laying down.